Bollinger Bands. In this video you will learn what the Bollinger Bands indicator is, what the Bollinger Bands indicator shows, how to use the Bollinger Bands indicator, how altering the Bollinger Bands indicator's settings affects it. The Bollinger Bands indicator is an oscillating indicator. Traders use it to measure the volatility of a market. The Bollinger Bands can help you to identify points at which the price of an asset is high or low, relative to its recent average. This can in turn help you to predict when price might rise or fall to its average level. Three main lines make up the Bollinger Bands indicator. The first of these, the central band, is a simple moving average. The second and third, the upper and lower bands, represent levels at which price is relatively high or low compared to this moving average. Most of an asset's price action will take place within two outer bands, meaning they can be used to predict reversals. If price reaches the upper band, this means it is relatively high and the asset could be overbought. You could look to sell an overbought asset on the assumption that its price will fall towards the central moving average. Conversely, if price reaches the lower band, this means it is relatively low and the asset could be oversold. You could look to buy an oversold asset on the assumption that its price will rise towards the central moving average. It is important to remember that just because price may reach the outer bands does not always mean it will reverse. Always look for further confirmation from another indicator or by using candlestick analysis before you place your trade. You can also use the distance between the bands to indicate how volatile the price of an asset is. If the distance between the bands is large, this indicates high volatility. Conversely, if the distance between the bands is small, this indicates low volatility. You can change the settings of the Bollinger Bands indicator to suit your own personal strategy. The first setting you can change is the period setting. Altering the period setting will alter the number of periods on which the Bollinger Band is calculated. The standard period setting is 20. If you change this to a lower setting, 10 periods for example, then the indicator will be more sensitive to price movements. This will result in choppier, narrower bands that price will reach and break through more often. This will offer more trading opportunities, but the signals will be less reliable. Conversely, if you change this to a higher setting, 30 periods for example, then the indicator will be less sensitive to price movements. This will result in smoother, wider bands that price will reach and break through less often. This will offer less trading opportunities, but the signals will be more reliable. The second setting you can change is the standard deviation setting. Changing the normal deviation setting will alter how much of the data from the moving average's normal distribution pattern is included in the bands. A standard deviation setting of 1 means that 68% of price action will be contained within the bands. A standard deviation setting of 2 means that 95% of price action will be contained within the bands. The default standard deviation setting for Bollinger Bands is 2. Increasing this setting to 2.6, for example, will widen the bands, meaning more price action will be contained within them. This will likely give you less frequent but more reliable signals. Decreasing this setting to 1.9, for example, will make the bands narrower, meaning less price action will be contained within them. This will likely give you more frequent but less reliable signals. So far you have learned that the Bollinger Bands indicator is an oscillator indicator. It can be used to measure price volatility. It can present selling opportunities when an asset is overbought or buying opportunities when an asset is oversold. You can change both the period setting and the standard deviation setting. Depending on how you change these settings, the Bollinger Bands indicator will give you frequent but less reliable signals or infrequent and more reliable signals.